If you have a credit card, mortgage, payday loan or do any type of consumer financing, expect to be hurt by President Donald Trump's plan to gut the Consumer Financial Protection Bureau, a controversial but effective industry watchdog. Right now, the focus is on the unusual situation of two people vying to become the agency's director, a matter that will be determined in court. Beyond that legal tussle, however, there's a larger issue: Trump's determination to dismantle the agency's mission, operations and agenda. Destroying this nearly 7-year-old agency would be dumb fiscal and public policy. It is one of the few regulatory friends that everyday banking customers have in Washington, D.C., and should be allowed to pursue its unabashedly pro-consumer mission. But Trump is poised to toss out the current mandate in favor of a more business-friendly mission. If successful, his administration risks ignoring or missing the types of industry abuses and missteps that have often led to fiscal calamities, including the last Great Recession. Mick Mulvaney, director of the Office of Management and Budget, is Trump's pick to run the Consumer Bureau. However, his legitimacy to assume the post is under attack from Leandra English, a top bureau staffer who was picked as acting director by former agency chief Richard Corder, who recently resigned. English is suing to stop Mulvaney's appointment. "We cannot stand by quietly if the president appoints another industry hack who tries to undo years of progress. We will resist." Brent Adams, senior vice president of policy at the Woodstock Institute, a Chicago-based nonprofit that advocates for affordable banking services, wrote me in an email. But some legal experts, including the top attorney for the CFPB, have reportedly said the president can pick a director and lean toward the court ruling in Trump's favor. Assuming the Trump regime takes command, it's pretty clear it won't be business as usual at the Bureau anymore. While in Congress in 2014, then Rep. Mulvaney from South Carolina argued for killing the agency, labeling it a joke. While being confirmed for his Office of Management and Budget position, Mulvaney again bashed the Bureau for being out of control and overreaching its authority. As with other Trump appointments to lead environmental protection and education, Mulvaney is the type who seems to hate the agency he's been named to manage. True, Mulvaney can't snap his fingers and change the agency overnight, but as director, he'll have great sway over the Bureau's approach and agenda. That's what is so troubling. While not above criticism, the CFPB has done a pretty credible job of protecting the public from the excesses of the financial services industry. The Bureau deserves kudos for going after Wells Fargo and its egregiously bad behavior of opening millions of phantom customer accounts designed to gin up business and executive bonuses. In 2016, the regulator slapped Wells with a $100 million fine. The Bureau also fined Citibank and Bank of America for marketing unwanted credit card commissions, like identity theft insurance. It's also insisting mortgage lenders clean up their act. The Bureau backed rules ensuring lenders market loans more honestly instead of hyping exotic notes with low teaser interest rates that fueled the worst abuses of the previous home mortgage crisis. And then there's reining in the proliferating payday and auto title lenders. After years of studying that industry, the regulator is pushing for rules that will limit those lenders from taking advantage of the working poor, immigrants, service members and low-income households that often get locked into paying deplorably high interest rates, over 400% in some cases, on short-term loans. None of this regulatory barrage has hurt the profitability of financial services businesses, demand for consumer loans or the overall economy. Take a look around. If anything, the argument can be made that the Bureau's activism and rules are helping to build consumer confidence and encouraging more customer spending and lending. Politically, Trump seems deeply determined to erase anything connected to former President Barack Obama's era. That includes the CFPB, which was considered by many Obama supporters as among the former president's more notable achievements. But practically speaking, Trump is making a big mistake. A strong and fair-minded consumer financial services regulator is essential. Indeed, Haven't we learned anything from the 2008 financial meltdown and the role that questionable and flimsy industry regulation had in producing a near-depression? The Consumer Financial Protection Bureau was one of the solutions to emerge from that extremely difficult and damaging time. Got this agency, and you're only asking for trouble, because the bankers will win while customers lose. Rate at ChicagoTribune.com, Twitter at RedTribAs.